might get joined, but we'll go ahead and get started. So I am Megan Durst. I am a partner with McLean Hill Regan Associates in our Zanesville and Newark locations. We have 4 offices in New Lexington, Lancaster, Zanesville, and Newark. And we have been helping our clients with getting PPP loans and navigating through this forgiveness. So what we're going to go through today is the documentation and forgiveness piece in a little more detail. If you have been on a previous webinar, these slides are different, so you can rest assured there's new information in here. All right. These are upcoming webinars that we have. If you're a CPA on the call, there will be one next Thursday, June 25th from 1 to 3. There is a cost associated with this one, but you'll get 2 hours of CPE. It will be accountant CPA focused, so we'll get a little more technical on some of the issues and be able to go through some more information since it's 2 hours. And then we'll also be presenting in a couple weeks a new What's New webinar, which hopefully will include all of the information that's supposed to be released soon by the SBA. Here is a snapshot of the PPP program as of June 16th. They're at $513 billion, so there's still about $120 billion left to give out. The deadline currently for getting a PPP loan, if a business hasn't gotten one, is June 30th. I would assume that could be extended if the money is not fully utilized, but as of right now, you have until June 30th to apply for funds. So if there's people that you know or a business that you're a part of that has not applied, there's still money and still time. Just a quick overview of the PPP program. All businesses are eligible, including Schedule C sole proprietors. The loan's based on 2.5 months of payroll and self-employed income from 2019. So you do both payroll that's been paid to employees and self-employed or partnership income. And that's 2.5 months. These loans are given through local banks. You can make the request, as I said, through June 30th currently, and they mature over 2 years. After June 5th, the maturity date extends to 5 years. It's a 1% loan with the payments deferred. It's currently 10 months after June 30th, so they're deferred through February of 2021. For PPP forgiveness, you must use the funds over 24 weeks, or you can elect to use the original 8-week forgiveness period if the loan was funded before June 5th, which was the day Trump signed the Payroll Flexibility Act that we'll go through here in a second. It includes payroll costs and non-payroll costs. You have to fill out a forgiveness application after the forgiveness period ends to request forgiveness. And then if not, it turns into that term loan we talked about. Must have documentation for essentially everything you use the PPP loan funds for: payroll, leases, expenses paid, receipts, and canceled checks, which we'll go through in this webinar. The loan forgiveness application is on the SBA website. I type in Google SBA PPP and it has a whole page on the Payroll Protection Program. The forgiveness application is on there. Currently the application is 11 pages. The one that's on there was released May 16th. There should be a new forgiveness application released anytime. I was hoping it would have been released by the time of this webinar. It has not been. The idea of this forgiveness application is the same. They've just done some extensions, so we'll see what they change when those things come out. On June 5th, the President signed the Payroll Protection Program Flexibility Act, which is Public Law 116-142. There is a link here on the slides of the bill and as it went through. It was passed in the House with a bipartisan vote and then passed through the Senate on June 3rd with no changes and was signed on June 5th, and it became law on June 5th because of an emergency order that was in place. There's about 8 or 9 things that it did. The highlights would be, it establishes a minimum maturity of 5 years for the loan that's not forgiven, but this is only after June 5th. So if you received your payroll funds in April and May, like most of our clients did, you'd still be under the 2-year maturity period that you signed your SBA document on. It extends the forgiveness period to 24 weeks. The non-payroll portion has been increased from 25% up to 40%. So the increased amount of non-payroll costs that could be used. It extends the period to rehire or eliminate reduction in payroll to December 31st from June 30th. So gave 6 extra months to rehire staff. It eliminates the FTE requirements. This was new. If you're unable to return to the same level of business as pre-COVID due to compliance with federal requirements or guidance. So, for instance, a place I could think about here, Lake Park in Coshocton, used to allow 1,700 was the capacity for the pool to get into, and they were going to reduce the capacity of the pool down to 75 because of federal guidelines. Because of that, they closed the pool for the summer. So I would think that if they would have received a PPP loan, they would not have been subject to the FTE requirements because of this elimination here, this test that you were allowed to use. So I think restaurants could potentially use this, and others that were, have had to reduce capacity for their business. Another FTE reduction that's allowed, this was already stated by the SBA, but now it's in the law, would be if you were unable to rehire a former employee or unable to hire a similar qualified employee. So if you laid employees off and gave them a written offer to rehire, they refused to come back, they got another job, you would not be hurt for that employee not coming back. We talked about the payment deferral period extended from 6 months from the date of the loan to 10 months after June 30th, which is currently February. And then it allows the employer to also defer payroll taxes, which was initially not allowed. So you can defer a portion of your employer payroll taxes that are due for at least a year. That was not allowed previously. We're not going to go through these in detail, but on previous webinars, we went through these 10 tips for PPP forgiveness. There is a link on our blog page, mhrcpa.com/blog, that has an old webinar on it where we go through these forgiveness tips in detail. We'll also put that link at the end of the webinar. But these are the things that we discussed for PPP forgiveness in the previous webinars: documenting the need, knowing your forgiveness period, payroll costs, what they are, and non-payroll costs, which include rent, mortgage, interest, and utility payments. Knowing your FTEs and how to calculate them, and the exceptions. The big highlight to number 7 is that you have to do a written offer to rehire if you rehired someone and they refuse to come back. 75% of first quarter wages, you have to pay your employees at least on an annualized basis 75% of what they made in the first quarter. And then December 31st, that you could go back and fix anything that you were unable to because of, still getting back up and running. Unknowns at this point, we still have some things that are unknown. Definitely, what's the new forgiveness application look like? Will the SBA allow you to use a different covered period between 8 and 24 weeks? For instance, we have a lot of clients that aren't going to use all of their PPP funds within the 8-week period, but they would have used them all by 10 or 11 weeks. So what does that look like for them? Are they able to use an 11-week forgiveness period, for instance, or do they have to choose either 8 or 24? That's not been clarified yet. I assume the SBA will clarify that. Will the PPP program change some more? I would assume the answer to this is yes. Something's been changing every 2 weeks, but as of right now, I think they're still working on the bill that Trump signed in June 5th. So we'll see if anything else changes. There's been talks of a simplified loan forgiveness application for loans less than $250,000. That has not happened at this point, but it's definitely something that we've heard talked about. One of the other questions we've gotten a lot that we don't know at this point, will officer or owner compensation be increased to 24.50 seconds? We assume and are assuming that it will be, but we've not seen that documented at this point. If you think that you have your forgiveness within the 8 weeks and the forgiveness application is denied, can you reapply? Not sure about that yet. What about an employee who resigned or was fired prior to when your PPP funds were given? Do you have to offer them a job back? We are hoping that that's clarified. And then what happens, we've had a couple of these, what happens if a business sells during the coverage period or after the coverage period? Is there any issues if the ownership changes hands? Everyone can feel free in the Q&A to ask questions, and we'll get to those at the end or throughout. Feel free to ask those questions in the questions and answer section at the bottom of your screen. Okay, so forgiveness process. Here's what I'm hearing from the banks, or what we're hearing. Most banks will start accepting applications after July 1st. Obviously, if it's after July 1st, then you would have to be using an 8-week forgiveness period, because if you're using 24-week, most forgiveness periods extend out to October. Most banks have told me that the forgiveness application will look similar to the loan application that you originally started with. So if you filled out a DocuSign packet to request the loan, then you'll probably have a DocuSign packet to fill out to request forgiveness. So that's something to look for. We'll see how the banks come up with those options. I've also heard about online forgiveness submissions. So, there could be some websites developed on submitting your forgiveness information. So we'll see. Some will obviously likely have some paper submissions. Those will likely be the smaller local banks or the ones that didn't have a huge volume of PPP loans that they gave out. And then some could use third-party processors to finalize and submit the applications to the SBA. So you could not necessarily maybe be working with your banker. You could be working, with a third party to help get all the documents submitted. So here are, here's the information to gather to be prepared for however the form is that your bank will ask you to submit your forgiveness. And we're going to go through each of these 7 items in detail. So we'll just get started here. So the PPP loan documents and disbursement date. This is on the general information of the loan forgiveness application. You know, obviously legal name, business address, contact information is similar to the loan application that was filled out. The SBA PPP loan number, my understanding, is in the loan documents that were signed when you received your PPP loan. So there's a loan number and a lender PPP loan number in those loan documents. So you'll have to have your loan documents out to fill out that information. Obviously, the PPP loan amount that you received and the disbursement date would be the date the funds were put into your account. Sometimes there's a little bit of fuzziness about that disbursement date, so I'd probably clarify that with the lender if there's any question, you know, kind of what that date is. But most loans, the date of the loan document and the disbursement date were the same, assuming that you signed the loan documents on the same day that they were sent out. The employees at the time of application, I believe this is a head count number, which you would have filled out on your application to get the loan. And then at the time of forgiveness, that's also a head count number. So if you had 3 employees, 2 part-time and 1 full-time, you'd still put 3 here at the time of application and 3 here. That's a data mining item that they're looking for there. The second item that you need to gather is the EIDL loan application and the advance amount, if you applied for those or if you did not get shut out of the EIDL application process. As a tip, if you're on here, my understanding is that EIDL loan application process has been reopened. So if you missed out on the opportunity to apply for a disaster loan the first time around, my understanding is the application process has reopened. So you should go to the SBA website and check that out. So for the EIDL advance amount and the application number, those go right here. The EIDL advance is the amount of funds that were deposited into your account. The maximum was $10,000. It was $1,000 per employee. So if you had 3 employees, you received $3,000. So you'd put $3,000 right there. And the EIDL application number, you put there. If you don't have the application, you can call the SBA and they'll give you the application number. Why they'd said that EIDL advances were not required, that repayment was not required. However, the forgiveness application explicitly says in it that the amount of forgiveness will be reduced by the amount of EIDL advance received. So if you received a $105,000 PPP loan and a $10,000 EIDL advance, and you spend all $105,000 for eligible forgiveness expenses, you'll fill out your forgiveness application requesting forgiveness for $105,000. But it's my understanding that the SBA will reduce that amount of forgiveness by $10,000. So your amount of forgiveness will only be $95,000, and that $10,000 will be turned into a 2-year or 5-year loan at 1%, or you can just repay it up front. Okay, covered forgiveness period. We're going to go through a few examples on this. So to talk about the 24 or 8-week periods. Okay, so there's a covered forgiveness period and an alternative period. The covered forgiveness period starts at your disbursement loan date. So it is the date the funds were received and goes 24 or 8 weeks at this point. That's what we're using. So you put in your date, April 20th here, and that goes 8 weeks out if you choose the 8-week period to June 14th, or 24 weeks out, which goes into October. So that's the covered period. That is used for all non-payroll costs, and it's used for your payroll costs unless you choose the alternative payroll covered period. So we're going to go through that. One thing that causes a little bit of confusion, or two things, I guess, on the alternative period. The alternative covered period is only for payroll costs. It does not have anything to do with non-payroll costs. So rent paid, utilities paid and incurred, mortgage interest paid is only for the covered period. You can't extend that an extra week. The alternative payroll covered period is just for payroll costs only. And you cannot use an alternative pay period for payroll costs unless you pay on weekly or biweekly payroll. So, if I have a client who pays on monthly payroll, they can't extend their alternative payroll covered period an extra month. They have to use the covered period. This was one of the articles that came out right as the bills were being finalized and signed. I believe this is, from everything I've seen, this seems to be the way that things are going to go, that borrowers can use the law will now say 24-week covered period. But if you received your PPP loan prior to the date the bill was signed, which is June 5th, they can elect to use the 8-week period. So, if a business has already used all of their proceeds and qualify for full forgiveness and they don't want to wait till the end of the year to apply for forgiveness, then that's when they'd use the 8-week period. But I'm not seeing anything where you can use an 11 or 12-week period. So we'll be interested to see what the SBA says about that. Okay, so here's the covered period example, and this is interactive. I have a poll to let you answer, so pay attention and see what you think. So we have a weekly payroll employer. So they're able to obviously use the alternative covered period if they want. They pay from Sunday to Saturday, and they pay on the following Friday. So they're working this week, for instance, their payroll period goes through Saturday, and then if I were an employee with this company, then I'd get paid on next Friday for my work. They receive their payroll funds on April 20th of 2020, and their payroll for these 8 or 9 weeks looks as follows. So for the pay period 4/12 to 4/18, that paid on 4/24, they paid $2,000 in gross payroll. From 4/19 to 4/25, they paid $2,000, so that obviously laid off most of their staff. They got them all called back, and they paid $20,000 in payroll on 5/8 and thereafter. So my question is, should this employer use the covered period or the alternative covered period? So what do you think? I'm going to launch a poll question to ask. There's no right or wrong answers here, just what you think. Okay. All right, so right now we've got 4 people thinking it's that they've just used the regular covered period, and we've got about 13 people thinking they'd use the alternative coverage period. So let's figure out who's right. Okay, so here's a picture of the April of the calendar. So if they receive their funds on April 20th, they received their funds on April 20th. Their first payroll was paid on this Friday, the 24th. And then they had already started in this payroll period. So if they wanted to do the coverage period, they would use April 20th through Sunday, June 14th. That would be their coverage period. If they wanted to use the alternative covered payroll period, they would pick April 26th to June 30th or June 20th. If they use the 24 weeks, I extended that out to October. So the idea would be is that since payroll was low here on April 24th, so they paid this one payroll that was small on April 24th, right here. They would probably want to elect to start on the 26th, so they would throw this 24th, they would throw this 24th payroll out, and they would start on the 26th, so they would add a big $20,000 payroll in and get rid of one of the 2,000. So the way I calculated it over an 8-week period, if they use the covered period, CP, they would have paid $2,000 on April 24th. They would have paid $2,000 on May 1st, and then they would have paid $20,000 for 7 more pays, or $144K. And then for the alternative period, they would have only used one $2,000 payroll and then 8 $20,000 payrolls, so they'd get payroll costs. Their payroll costs would increase $18,000. Okay, so I'll share the results real quick. Okay. All right, next example. We're going to go through this again, just different set of results. This is a true life example that we have with one of our clients. So they're a weekly payroll employer again. They received their payroll funds on 4/24, and right away they either paid back payroll that they hadn't paid out, or they paid bonuses. So on April 24th, they paid $40,000 in payroll and bonuses. On 5/1, they paid 20. On 5/8, they paid 20, and then they paid 20 after that. So what would they use? Either the covered period or the alternative covered period. Okay. Yep, it looks like almost everyone's participated, and about 95% of the group thinks that the covered period is what everybody, what this employer should use. So let's walk through that. So same set of examples. So they received their money on June 24th, Friday, June 24th. So that is the start of their original covered period. It goes, if they do 8 weeks, to June 18th. Okay, it's not Sunday, I think that's a Thursday. Alternative coverage period would go from April 26th to Saturday, June 20th, or October 10th if they use the alternative period. Since the payroll was high on 4/24, if you would elect to use the alternative period that starts on April 26th, you could not include that big payroll on April 24th. So in this example, the covered period would actually include $200,000 of payroll costs, and the alternative period would only use 180. So in this example, we would want to use the covered period. Okay. Hopefully that helps. All right, so moving on from the covered period. So from there, we need to go through the forgiveness calculation and details of amounts paid. So throughout the process, I'm sure you've developed some kind of spreadsheet to track payroll costs and non-payroll costs. So you need to calculate, obviously, the amounts that you paid for those. Are your payroll costs at least 60% of the total requested forgiveness? So if you got a $100,000 PPP loan and you've spent $100,000, is your payroll at least 60% of that? Have the employees been paid 75% of first quarter payroll? And have you kept your FTEs consistent, or can you document why those are not consistent? So just a quick recap, allowable payroll costs include gross salary, wages, commissions, tips, vacation, paid out, etc. Also, any severance pay for dismissal or separation. Question we've been asked a lot, so I put it on here. It does not include employer Social Security and Medicare taxes paid. All right, so I've been asked this question a few different ways, so I wanted to put it in here as a slide. So in this example, it's payroll costs paid. So I oversimplified, but my thought was, if you use a payroll service such as Paychecks, ADP, Paylocity, etc., then as long as the payroll is funded out of your account, you would use gross payroll, because those payroll services take taxes out when they take your payroll. So when they pull your payroll, they do a pull. You know, Paychecks, for instance, would do a pull for $84.35, which is the net payroll, and then they would take the taxes, which is the withholding, plus the employer taxes. So they would take another disbursement out of, you know, around $15. So they do that all at the same time. If you self-prepare, so if the company self-prepares payroll, then I think there's an argument that could be said, since you have to document amounts paid, then you would have to have it use your net payroll plus all your payroll deposits, which should get you to the same answer. But I think what I'm trying to say here is that you need to make all your tax deposits within your covered period if you self-prepare payroll. And here's why I'm saying that. So if you only wrote a payroll check for $84.35, okay, and then you did not pay until July 31st in your second quarter filing these payroll taxes, I don't know that you could include these payroll tax withholdings in your forgiveness request, because you've only paid actual paid out cash of $84.35. So I think what you need to do there is you need to pay your a 941 deposit and a state withholding deposit and a local tax withholding deposit and whatever else is held. You need to make sure all of those things are paid within your forgiveness period. So for forgiveness, it's that $100, but if you self-prepare payroll, you're going to have to show the SBA documentation that you paid $84.35, $3, $5, $1.45, and $6.20 to get the whole $100 included. Okay. Other allowable payroll costs: employer payment of group term health care, including premiums. So that should be reduced by employee withholding. So you're already including with employee withholding on the payroll. So that would only include the employer paid. So if the employee pays 50% of healthcare and the employer pays 50% of healthcare, then that amount would be about 50% when it all came out. Payment for retirement benefits, 401k, and simple match would be my examples there. Payment for state and local tax payments, including SUTA. So if you received your funds, like one of our previous examples, on April 24th, and you paid your first quarter state unemployment on April 30th when it was due, then you would be able to include that first quarter unemployment in your PPP forgiveness application as a payroll cost. Also, one that's forgotten, I think, sometimes is the payments for self-employed people that received a PPP loan. My suggestion is that you write and cash a check for payment to show payment. You know, some self-employed people obviously don't pay themselves. You know, you would not run that through payroll. You would just write yourself a draw. But I think it would probably be good for documentation to show that you paid yourself that money out. So this is just a screenshot of the Schedule C. If you remember, the PPP request was based on line 31 of the Schedule C from 2019. So you would take 8 weeks if you're using an 8-week coverage period, or our assumption is 24 weeks, and extrapolate that out as how much you could pay yourself. So this is just an example of a self-employed person who had no employees. Their Schedule C from 2019 was $75,000. They have non-payroll costs of $1,000 a month. So based on the CARES Act as it was for the 8-week forgiveness period, they would have payroll costs of $11,538. So I took $75,000 divided by 52 times 8. And then non-payroll costs of $1,000 a month. So you assume you'd have about 2 months in there. So you'd have forgiveness costs of $13,538. If they had a PPP loan of $15,625, their forgiveness amount would only be the $13,538, and they would have $2,087 that would not be forgiven. So based on the new law that was signed by Trump in June 5th, you could pay yourself up to $34,000. You could pay yourself the non-payroll costs of the 6. So you could potentially have $40,000 in costs over a 24-week period. Your PPP loan was $15,625. So you could write yourself payroll costs of $15,625 and have all of your loan forgiven. So another polling question here. For a self-employed individual, in going through this example, what do you think? Do you think that a self-employed individual would most likely use a forgiveness period of 8 weeks or 24 weeks? Yep. Yep, it looks like 93% of those that have responded are saying the 24-week period. And you guys are correct. So the idea here is that over 24 weeks, you could pay yourself all of your PPP loan, the whole amount, and you would receive full forgiveness. So over an 8-week period, you would have to have non-payroll costs to get full forgiveness over the 8-week covered period. So I would think all self-employed individuals will likely, unless they have high rent, utilities, or mortgage interest, they would in all likelihood use a 24-week covered period to request forgiveness with. Okay. So for non-payroll costs, That would include the rent or lease on real or personal property, utilities and mortgage interest for obligations and services prior to 2/15 of 20. So for all eligible non-payroll costs, it would be amounts paid during the covered period. Remember, non-payroll costs do not use anything for the alternative covered period. So amounts paid during the covered period, whether you use 8 or 24 weeks, and then amounts incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So we have a few clients whose payroll period is ending yesterday, today, tomorrow, for instance. If they still receive an electric bill that would include this, you know, up to yesterday, today, tomorrow, then and pay it by the due date on the bill, they'll still get to include that non-payroll costs. So obviously this is from Georgia, but the same ideas apply. You know, if you have a covered period through June 24th, let's say, that's not due until July 2nd, you would still get to include the majority of this bill in your covered non-payroll cost on your forgiveness application, even though it's paid after your forgiveness period ends. So I think we went over this, but just to clarify, I think one good thing about the 24-week forgiveness period is that you likely, since it's larger than 2.5 months of payroll, you'll likely only need to use payroll costs to get forgiveness. So you can likely only use gross payroll or gross payroll plus healthcare plus taxes, and not have to use the multiple utility bills and rent and things like that to document all your non-payroll costs. So I think a 24-week forgiveness period will make life easier for documentation, which is definitely something to think about. Okay, so for forgiveness for the FTE calculation. So I went through a slide like this on a previous webinar. The idea of the FTE calculation is that if you have an employee that works 40 or more hours, they're counted as one FTE because you can't have more than one for one employee. Anyone that works less than 40 hours, you do their weekly hours divided by 40, and you can use that amount. Or there's a simplified method where you say anyone who works 40 hours or more, you count as one, and anyone who works less than 40 hours, you count them as half. So this is kind of an illustration of 5 employees and what you would do, how you would calculate the FTEs. You know, this one worked 50 hours, counted as one for both the actual calculation and the simplified. Same with employee B. Employee C worked 20 hours, so 20 over 40 is a half. So those are the same. This one worked 32 hours, so 0.8. If I use the simplified method, that's 0.5. 16 is 0.4, 0.5. So if in this example, they would actually return less FTEs if they use the simplified method. It's obviously more simple to calculate. So I think a lot of people will use the simplified FTE calculation method as opposed to the actual calculation method. We will have a few that use actual. For instance, if we have an employer that has a lot of this 5th employee who works 16 hours, 8 hours a week, you know, you have an ice cream shop that has a lot of high school or college students that work during the summer that only work 1 or 2 shifts a week, they may actually benefit from using the actual FTE calculation. But you definitely have to calculate it. They note it in the CARES Act and in the new bill that was signed on June 5th and all over the forgiveness application. So it's definitely something that you'll have to calculate and document. And we'll go through what you have to document here in a few minutes. I just wanted to cover the calculation there. So for the forgiveness application, what is going to be required to be given to the lender right now, there's 11 pages on the application, is pages 3, 4, and 6. Okay, so there's currently 11. I assume when the SBA releases their new application, it will be a little bit longer. But right now there's 11 pages. You'll need to give them 3, 4, and 6. There's a Schedule A worksheet that I don't know how you could actually finish the calculation without filling that one out too. I would suggest preparing that worksheet, but you don't have to give that to them as documentation. And then the documentation required is listed on page 10. So I just wanted to kind of give you page numbers for reference for those applications. So I'll show you here for just a second. So on page 3, that's the forgiveness application that we talked about. We looked at the top, and then it also summarizes everything with payroll and non-payroll costs. It references Schedule A, so you'd enter your payroll costs here of $100,000, let's say, and you'd have your mortgage interest paid, or maybe you don't own the business, you pay rent of $3,000, and you have utilities of $1,500. So, and you paid everybody the right amounts. So you used $104,500. You kept your FTE steady, or you rehired everybody by the end of the forgiveness period. So you would be able to say you had $104,500 in forgiveness costs. Let's say your loan was $100,000. 75% of payroll. This will be changed to 60% of payroll when the next one comes out. So when it goes to 60%, you'll use $60,000 here. And then the forgiveness amount is the smallest of 8, 9, or 10. So you're limited to the $100,000 there. Okay. Page 4 includes certifications, similar to what you had on the loan application. A couple things, or probably the one that isn't mentioned really in any other place on the forgiveness app that I want to draw attention to, is this first one. This certifies that you use the loan to pay for costs that were payroll, to retain employees, mortgage interest, rent expenses, utility payments. You did not have any FTE reductions, or you can explain why. You did not include non-payroll costs in excess. This will change to 40%. And then you did not exceed 8 weeks worth, or 24 weeks, I assume they'll change it to, for any owner, employee, or self-employed individual general partner that's capped at $15,385. So this is kind of an important first certification that needs to be paid attention to. So the idea with that one is that, let's say you're an owner who paid yourself $50,000 last year, and you decided when you got this PPP loan that you wanted to double your salary and give yourself a raise to $100,000. Okay, so if you received $50,000 last year and you're using the 8-week period, you can only pay yourself $7,692 to be eligible, that's eligible for forgiveness. Even if you gave yourself a $100,000 divided by 52 times 8. Even if you paid yourself $15,384, because you did not pay yourself $100,000 in 2019, you're limited to this $76.92. So that was one of those things where I think a lot of people thought, well, I'll just give myself a raise. And this bullet point right here stops that. You're not allowed to just pay yourself as an owner employee extra amounts to get to the forgiveness. Okay, so that essentially reiterates what we just talked about. I assume this cap will be increased for 24 weeks to 46,153, but we'll have to see when this all finishes up. Okay, for the forgiveness, information to gather, documentation. This is on page 10 of the forgiveness application. So for payroll, you need to document the amounts paid and essentially probably cleared. So they're going to be requesting bank account statements, third-party payroll service providers, you know, statements. For instance, I just saw Paychecks is a payroll service we use a lot. They're going to come out with a report that hopefully answers everything that you would need to know for the forgiveness, or you could use payroll journals, so on. Tax forms or equivalent third-party payroll service provider reports that show during the covered period or the alternative period, you know, what you file on your 941 and your state quarterly business and individual wage reporting. So your unemployment filing that you used to pay and things like that, you would have to provide documentation for those things. And then payment receipts, canceled checks, and account statements showing employer contributions to health insurance, retirement plans, and so on. So I think the idea here is that if it didn't clear the bank, if it was not paid and something that was cash with a canceled check, then it's not included. That's why I was suggesting that self-employed people write themselves a check, cash the check, and then you'd have a canceled check to show. For FTEs, we talked about how to calculate the FTEs. You're going to have to calculate the average number of FTEs per month from February 15th to June 30th of 19, or January 1st of 2020 to January 29th. We don't have a lot of seasonal employers, but there's alternative payroll periods you can use to calculate FTEs. So on Schedule A, there is a calculation. Schedule A. So this is Schedule A that you have to give to the bank. So there's an FTE reduction calculation. I'm hoping personally for clarification from the SBA on this, because I think for people who kept their employees steady, didn't lay anybody off, hopefully they'll be able to check here, check that box, and then move on. We'll see. But what they're saying is that you have to fill out lines 11 and the total average FTEs, and then divide that, and you'll have to show documentation for each of those periods that you use. Okay. So documents may include tax filings, 941s, and so on. And then I think obviously a document or a spreadsheet that shows your calculation of how you got to the FTEs you calculated. So, but they're again looking for a third-party documentation source there if you, however you prepare payroll. For non-payroll costs, documentation that you had the loan, the mortgage, or the utility or the rent in place before February 15th and during the covered period. So for mortgage interest payments, you'd have to provide a copy of the lender amortization schedule and receipts or canceled checks verifying the payments during the covered period, you know, including lender statements and so on. So what I don't know is that if, for instance, I used the same lender for this business mortgage as I did for the PPP loan, do I have to provide these things since that lender would already have it? I would think that since it's going to be submitted to the SBA, you probably would, but I'll be interested to see what lenders say on that. Business rent or lease, a copy of the executed rent agreement, and receipts or canceled checks verifying the payments during the period. Also, showing payment on that February 2020 timeframe as well. All right, and then business utility payments, a copy of the February 2020 invoice, as well as the invoices for the covered periods and receipts, canceled checks, or account statements verifying those payments. So you can quickly see why, you know, if I can completely eliminate this by going to a 24-week period, it could be worthwhile. For instance, we had one client who has 30 utility payments so far during the 8-week period. So if you can only imagine what that would expand to over a 24-week period. So as opposed to keeping a canceled check and an invoice for all of those periods, they may just elect the 24-week period, assuming everything else checks out, and then they wouldn't have to give anybody those things. Okay, so these are items that you must maintain, but you're not required to submit. You know, obviously this could be requested at some point, but for now, they're not requiring submission of these things. So Schedule A, worksheet table 1 and 2, that goes through each employee, individual employee, what they were paid, and if they had a wage reduction. That also documents each employee who received more than an annual $100,000 in 2019. And then if you had anyone who you extended a job offer to and they refused to come back for whatever reason, you know, documentation of the written offer to rehire and that you followed all the steps. We went through those steps. There's 5. The one that they've added that I think is going to be often overlooked is that you're required to notify Job and Family Services of their refusal to return. So make sure you've not only did a written offer, that they refused and that you've documented that, but that you've also notified Job and Family Services of their refusal to rehire. And then documentation to support Schedule A, the FTE reduction. Again, these say they're on the SBA application that you're not required to submit, but that you should keep because you could be requested. All right, a couple things especially since we've not gotten to them. We have done a forgiveness application example. This will change when the new application comes out, but there is an interactive, or it's at least a little bit interactive forgiveness application. If you go to our website, mhrcpa.com/blog, you'll see on here, okay. You'll see on here an old, not old, it aired on June 5th. It includes the new information in there, but it's more in depth about the forgiveness. For instance, you know, if you have questions about a few specific items I mentioned, it would be in this video here. right here, example of PPP forgiveness spreadsheet. If you click here, you can download the spreadsheet that I just showed you right here and use it to play around with and look through your application. Okay. We're not going to go through any examples. I will try to answer some questions. Just a few things since we are at 1 o'clock and if you need to jump off of here. My contact information's here. If you'd like a copy of the slides, feel free to send me an email at mmdurst@mhrcpa.com. I will also be posting a copy of this recording and probably the slides on that blog page, so you can look for that tomorrow. And then you could just download the slides yourself if you'd like. And then don't forget about the upcoming webinars. For those who are going to jump off, thank you so much for logging in. Hope you guys are able to log in on July 8th, but we'll go through a few of these questions here. All right. So severance pay, the question was, did you also say severance pay is covered as a payroll cost? Yes. Severance cost is covered as a payroll cost. Have employees been paid 75% of their first quarter payroll? On that, wonder if they were out on leave, unpaid leave of absence. Okay, so I think the idea would be is that if they're still an employee, you would be required to make up that payroll cost. And I'll show you here just a quick example. So if you have an employee who was salary, for instance, and made $12,000 in the first quarter, and then you paid them $55,000 annualized in the covered period, then you'd be fine. But let's say they were out on leave, so you paid them $0, or you reduced their pay to half. Okay. So what that's saying is you've reduced their pay to half. So what do I have to pay them? You would have at least had to have paid them 75% of what they made. So if you reduce their hours, you would either owe money back on your PPP loan, or you would have to make up for that amount you underpaid. So annual salary, we're going to say was $48,000. And then it went down to $24,000. And it's still $24,000. So the idea here would be that if you did not make up what they were being paid, so you continue to only pay them half, then you would have a reduction amount of $1,846 for this employee. So if you only pay them 50%, you get dinged a little bit. If you pay them $0 and don't make that up by, this will change to December 31st, then you would owe you would not be allowed forgiveness of $5,538. So the idea would be that you should at least pay them 75% of what they made before, and then you have no problem. Or you have to make it up by, now it's December 31st, but you have to make up the shortfall by the end of the period. So I hope that helps. This is probably the most difficult concept of this whole thing, and we're hoping this is one of the things that gets simplified, but that's the idea with the 75% of first quarter payroll. Okay. With FTE, use the covered period, yes, you would use the covered period, or if you use the alternative payroll period, you would use the alternative payroll period to calculate your FTEs. Okay. Somebody asked what the website was again. Here is the mhrcpa.com/blog. Is there a form to notify Job and Family Services? My understanding, let's look here. I would, my understanding is I believe that you go on, this is an article, but this will work. There's a form called Report COVID-19 Quits or Work Refusals. So there is a form. The idea there, they must be changing it, but you can email UI return to work at jfs.ohio.gov to ask for the form. But I think what the idea of this is that if you have an employee who refuses to come to work, you can either fill out the form, or if you have a login, an employer login on Job and Family Services, I know you can do it online as well. Okay. And then I believe I answered the question on the owner-officer rule. So are there any other questions? I think we got them all. So this is the blog page. We'll be posting a recording of the video by tomorrow with copies of the slides for your use. It also has on there the spreadsheet, so feel free to go there to get updates. If you look at this just one more time. It also has some other things on here about the offer to rehire and, you know, some older posts on here about lending options and so on. So feel free to look on there for kind of updates as they go along. All right, other than that, thank you guys so much for logging in. Hope to see you again on July 8th when we go through what's new, which will hopefully include all of the new things from the most recent law signed by June 5th. And if you have any questions, feel free to go to our website and contact us for any of your questions or help with the forgiveness. Thank you so much. Have a good rest of your day.